Rupees 50,000 per month in dividend passive income. Today we're going to create an actual portfolio to prove that this is possible. I mean, look at all these posts over here. Wow, so much moolah. Today we will actually create the portfolio to prove that this can be done. But in true de-influencing style, we'll actually talk about the risks involved in actually doing this, because these guys, they don't talk about it. So first, we'll create a portfolio. Second, we'll find out what number we need to get to 50,000 rupees a month passively. And third, we'll talk about all the risks involved. But before we actually do that, hit that like and that subscribe button, because hum log bahut mehnat kar rahe hain and I need your like. I need that subscribe. So let's start with step number 1. So let's start right from the basics. What's a dividend? Let's go back to the 1600s, where the Dutch East India Company for the first time in the world went public, which meant the Aam Aadmi, or well, the royals and the rich people, could invest and get shares. Now this company is very special. They would go around the world in ships, risking their lives to get back spices. And spices made a lot of profit. Now, obviously, the investors put in money to make these voyages possible. So, to actually make an exit or give some return on these investments, the answer was simple. Take the profits and redistribute a part of them to the investors. That's called a dividend. Even today, all these companies over here give dividend from their profits. Not all of it, a part of their profits. The first thing we need to know is what kind of company can actually pay a dividend. Obviously, a profitable company. Otherwise, they'll have no money to give back. But do note, sometimes non-profitable companies may also pay a dividend since they have a robust cash reserve. So the metric we need to look at is ROCE. Now, I won't get too much into the details of this. Basically, it's a measure to understand what percentage of profit is the company able to make with respect to the total capital employed by the company. For example, a capital employed of 1 crore, you don't want them to be making 1 rupee profit. You probably want them to make 10% or 10 lakh rupees profit. So it not only tells you profitability, it also tells you efficiency, whether it's good or not. The ROC metric we need to qualify for our portfolio is 10% or greater. So this is something we absolutely need, can't be below this. The second metric is EPS. EPS or earnings. Now, there are multiple ways to look at this, but basically we want earnings to be going up. The only way earnings can be going up over 5 or 6 year period is if the company is doing very well and also the market is also growing. The industry is also growing. So second thing we need is EPS actually growing. That's our second metric for our screener. The third metric is going to be dividend yield. Now, I am damn sure you would have seen a paper like this saying 200% dividend. Does that mean if you put in 1 lakh rupees, 2 lakh rupees will come back? Absolutely not. Just like most things in finance, things have a let me explain moment. So over here, it's very simple. The 200% dividend declared that you see on newspapers or the internet is on the face value, which is 2, 4 or 5 rupees, which doesn't make a big difference to you. What matters to you is how much money did you put in and how much dividend are you getting on the capital you have invested. Dividend yield does exactly that. It takes the dividend amount, divides it by the current market price to give you a percentage. In the market, any dividend yield above 2% is wow, amazing, maja aaya. Now, why is a 2% or greater dividend considered amazing? Because the company's job is not to give you a source of passive income or a source of income where it's giving you part of the profits. Its job is to actually grow the company. The growth happens and hopefully the share price also appreciates. So there's capital appreciation. A company's job is not to give dividend. If it does, great, thanks, but that's not why it primarily exists. Anyway, let's move on to make the screener. I have all these 3 metrics and I'll open it up over here, run it and hit done. I've also sorted it as per market cap. We've also added market cap greater than 10,000 crores, which makes this greater than $1 billion. So the largest companies come first, followed by the least smallest companies below that. Now you'll see a new column over here called dividend yield. Look at that. That's the dividend yield. That's amazing, right? And some companies like Coal India, etc., have really large dividend yields. Sounds tasty. But here is the problem. Let's suppose you make the portfolio out of this of say 15 or 20 stocks. Your average dividend yield will come to 4% or 5%. Now, to actually make 50,000 rupees a month or 6 lakh rupees a year, you will have to have a capital of 1.5 crores. Now, most of us don't have that kind of capital. So if anyone tells you you can do XYZ to make passive income from the market, they are lying. It's not true. It is false. The second problem is, since the job of the company is not to give you a dividend but to actually grow the business, it one day may decide it doesn't want to give the dividend. So even if you have that 1.5 crores and even if you create that portfolio, there's no sort of guarantee where they have to give that dividend. It's their choice. It's their way of rewarding their investors. And for some reason, they may choose just not to do it one day. The third problem is the dividend yield itself. Now, if you take a look at, say, ITC, when the price of the stock was lower, its yield was a beautiful 6%. Then the stock rose and the yield is now around 2-3%. What does this mean? Does it make ITC a bad company? Not at all. Actually, it has nothing to do with the company. It just has to do with your perspective of trying to make a passive income. That's not how an investor should think. An investor should think, he thinks these 15, 20, 30 companies are amazing and he should try to hold them for as long as possible. Even better yet, try to hold an index fund, Nifty 50 stocks, and hold them for as long as possible. Creating a portfolio to create a passive income out of, especially stocks, just doesn't work. You should throw this mindset away. Another red flag, and might I say the largest, biggest red flag, is capital erosion. If you pick a stock because the dividend yield seems attractive, but the company itself isn't good, the business isn't good, then the stock price could fall significantly. Let's say the stock price falls 30, 40, 50%. Suddenly that 2 or 3% dividend yield won't mean much. So here's the mindset of how you should think about this. 1. Stock investing is a long-term game for capital appreciation, not dividends. 2. Identify what kind of investor are you. You're either picking stocks of your own, creating your own portfolio, or just simply investing in an index fund. Number 3. If you do this for a really long time, you might just get a little lucky and some of the stocks you bought, not for dividends, do pay out a dividend, and because your portfolio becomes large and you did this for decades, the dividend payout will be nice. Then you can probably make a reel about it and the cycle can start all over again. For example, Warren Baba over here makes billions of dollars just from dividend, but he didn't buy those companies for the dividend. He bought it because the business was good. So you should also think the same. We've been thinking of creating this series for a while now, and we wanted to start with this de-influencing series, where we basically try to target the greedy people in the market, explain them and tease them with the greed, talk about how it's possible, and then explain all the risks, all of it. So if we miss some risk, please put it in the comments below. And once you, the user, understand the greed and the risk part, hopefully you'll make the right decision. Hopefully. If you think this is interesting and we should continue this series, please tell us what other things we should include in the de-influencing series. Put it in the comments below and we'll come up with a bunch more every single week. If you enjoyed this, hit that like and subscribe button and see you in the next episode. और तीसरा, सारे खतरों को बताएंगे. Dude, I saw one do this. No. क्या इसमें डच ईस्ट इंडिया की कंपनी का स्टोरी आएगा ना?